So today we're going to talk about how you can invest in the S&P 500 if you are from the UK. So hopefully by the end of this video you know how to do that. Now first of all, a little bit of a shout out to you guys that are searching this, because right now you're probably ahead of 90% of the population in the UK. Not many people know or research how to create wealth for themselves. That's one of the best things that you can do, is look at investments that make you money without you having to do much work, and that money that you earn is working for you. And right now you're on the right track by searching this sort of information up. So well done to you guys. Realistically, this should be taught in schools in the UK, but it isn't. Maybe one day we do have a UK government that does put it in place that this is taught on the curriculum in schools, but right now it's not. But at least you guys are searching for it, and hopefully you've come to the right place where I'll show you how to do this today. Now the S&P 500 is historically a very good investment to make. It is a relatively lower risk investment in the stock market, because rather than buying an individual stock, you are buying a basket of stocks. And obviously when you've got a basket of stocks, if there is one stock that doesn't work out or is a stock that doesn't do well, it's okay, because when you have the S&P 500, there is a collection of 500 stocks. If you have one stock that doesn't do very well or ends up going bankrupt, you should be okay, because hopefully the other 499 stocks will make up for it. So there's that element of risk that isn't really there with buying the S&P 500, but historically as well, the returns are pretty good. Normally it's a lot better than having cash in your bank account. Getting your cash in the bank account can, until the last couple of months, will normally historically get you 1, 2, 3%. The S&P 500 historically gives you around 8-9% return a year, which is pretty good for not having to do much work and only having to click a buy button. Now, actually in the last 5 years, the S&P 500 has actually performed even better than that. In the last 5 years, the S&P 500 has actually returned around about 97% when you do exclude dividends, which is a very good return. So you imagine if you did this 5 years ago and you would be up 97% for not having to do too much work, only having to go onto an investing app and clicking the buy button. It's a pretty nice return, and that's why it is a good investment to make, because you are buying 500 of the great US companies and they're going to give you good returns. And like I said, there's not that much risk there, because if there is one that does go wrong, obviously your other stocks should make up for it when you do buy the S&P 500. So getting on to how you actually go buy the S&P 500. Now a lot of people are not aware of this, but you cannot actually buy the S&P 500 directly. You have to buy an ETF tracker. Now, to get invested into the S&P 500, first of all, you need to have an investing platform. There's plenty out there. People use Vanguard, AJ Bell, for example, Free Trade, Invest Engine, Trading 212. For me personally, Trading 212 is currently the best platform out there. So you need to go get Trading 212. Now I do have a link in the description where if you do join through that link, it'll give you a free share worth up to £100. So you got to download that platform, and when you get Trading 212 on either your web browser or on your phone and you download the app, personally for me, I like the phone app, so I use that myself, but if you like to use the web, you can go use it on the web. So download that app onto your phone, you download the app, you set your account up, where hey, hopefully you got your free share as well, and then you're going to click on the search bar, and I'm going to show you this with a screen recording. So you click on the search magnifying glass at the bottom, you're going to go into the search and you're going to type in the S&P 500 and you're going to click search. Now when you click search, there's going to be a lot of different options. So these options here are different trackers of the S&P 500. Some have a little bit of variation on the weighted on certain things, the cost on potentially holding some of these ETFs. So you may want to, today I'm not going to go into much detail on that, but you might want to do a little bit more research on that, about some differences between some of these different ETF trackers of the index of the S&P 500. Quite often the one that most people do go for is the Vanguard S&P 500, which will come at the top normally when you search. Now the only difference between the two that come at the top is one will say accumulated and one will say distributed, or it might be shortened down to ACC or something, and the one might be shortened down in brackets to DIS. The only difference between them two is that, as well as getting the share price appreciation of it going up, the S&P 500 also pays a dividend. I think the dividend is somewhere around about 1.3% right now, so you'll also receive that. The only difference between them is that when you receive the dividend, accumulated will be that you will have that dividend automatically reinvested into the S&P 500 for you. Distributed will mean when the dividend is paid, you will actually keep the money for yourself. So depending on what stage you're at, you might want to go, you know what, let's just get more money into accumulating more wealth. Distributed might be if you're at a stage where you go, actually, I want to get that little bit of payment every couple of months, and I want to use that payment for something potentially, whether that be retirement or something. It's down to you. That's not the point of the video today. Like I said, there's probably the next step where you want to go on is researching to make sure you are buying the right ETF of the S&P 500. Today I just used the Vanguard for you guys, which is the most common one, and as well as that, there might be a point where you think about, do you want to have that dividend reinvested for you automatically, or do you want to have that dividend distributed for you? So that's just something to consider when you want to do a little bit more research into it. But that is the basic way of getting invested into the S&P 500 if you are from the UK. So hopefully that helps you on the start of your investing journey, because more than likely if you're researching that, you're probably at the start of that investing journey, and the S&P 500 is a good way to go. Like I said, if you do want to use Trading 212, which I personally would recommend as the broker that you use to go buy your S&P with, then the link is in the description and you get a free share worth up to £100 with that. What I will also add to the video is that it is also worth, for tax benefit as well, researching how you invest into the S&P 500. You can either have a normal invest account or a stocks and shares ISA. I would recommend, if you can, opening up a stocks and shares ISA, because then whenever you come to sell your S&P 500, whether that be in 5, 10, 15, retirement, whenever you go to sell it, if you are buying it in a stocks and shares ISA, you will not have to pay any tax on them profits that you do make, which is also another little bonus that I'll give you there for future reference. So hopefully that gave you a lot of information on how to do that. And if there is demand for any other subjects to be covered, I will also look at doing that for you guys, so put them down in the comment section. Apart from that, I'll see you in a bit.